This is actually the 9 o'clock hour candle on Friday, April the 27th. So here we are 24 hours later from right here, which is where yesterday's level post. So we saw the action, the sell zones and the cap held and got enough to get break even. If not, you could have been either still in the trade or stopped out of the trade, especially if you don't play off the cap during that same day. For Friday, out of this move, what we were looking at Friday on the New York session is our cap had gone to 104.77 and our sell zone had moved up 104.59.49, and this is here. So New York comes in, goes to the sell zone, actually overshoots, which can be typical on a Friday. Still under the cap though, so you know any stop is going to be above this cap. So if you're in a sell here, it's the same kind of process. Now on Fridays, you got to remember the levels. We're posting these levels expecting the levels to do the same thing. We treat it as a 24-hour trading day, so even though it's Friday, we will carry these levels and trades through till Monday's post, unless we update it. If that makes you uncomfortable, then realize that in your trading before you enter new trades on Friday. But a lot of times we see some of the best moves, but I tend to historically, when liquidity dries up, I will reduce size on Friday a bit, but I will continue to trade and hold them over the weekend, sometimes at reduced size though, me personally. So here we are, our sales here, our cap, same process whether you took a sell here, sell here. Had to overshoot. It's Friday, had an overshoot to the top side, maybe 14 pips. If you entered here, then you had 23 pips was your drawdown. But the reason we put the cap here is because this cap is kind of our, I won't say nervous line because we're over being nervous anymore, but I know traders can get nervous in trades. The biggest part of trading can be an emotional journey, and that's why we try to create a plan, and that's why it'll help visually to change the colors of your line. Even though this for us is a trade entry, I think it'll help you if you have your sell zone and your cap, and then if you want a fixed stop, it needs to be above here, like we said, 11 or 12 pips in case of an overshoot. But then it kind of gives you that day a visual perspective of, okay, well, I'm down, I'm down on the trade, the market's moving, well, what do I do now? Is the market just going to continue against me? And that's where you really look at the cap line and say, well, okay, the cap line still is capping this, so there's no need for me to change or get nervous about anything. And if you have a fixed stop, then you know your risk ahead of time. And that's how you trade. You just got to trade with a game plan. You're not going to win them all. Trading's about having a roadmap and a game plan and executing it. And depending on your risk reward, that really determines how many wins you need against losses. We know the probability of our, the levels that we use is fairly decent and fairly good win ratio. As an active trader, you can do a lot better, but just from a straight setting orders, you'll make money. So no need to get nervous. You just follow the levels, follow the lines, and if it goes against you and you lose a trade, you lose a trade, and you get ready for the next one. And you just have to be consistent in it. Don't go crazy when you win a bunch of trades. It don't draw back when you lose a trade, even if you lose a couple trades in a row. Trading is about statistics, and I have not met anyone in my 16 years of trading that has never not lost a trade. I met guys that, depends on their system. Met guys who have lost, they lose 70% of their trades, but the 30% of the trades they win way outweigh the ones they lose because they're really tight. Then I met guys who have a more of an even win ratio, but they're winning, so they win 50% of the time, lose 50% of the time, but still, again, their risk reward is right, so they're making more. That makes up for the losses, so they're actually making money. So if you have a system that's winning, the win ratio is tilted in your favor, which these levels are, then what you have to make sure of is that your risk and reward is balanced, and so you're taking profit and protecting the trade when you need to. And that's where these levels and the caps will help you. Now on, if you carried these sales over the weekend, of course we made a post this morning about clearing profit because the RBA meeting is tonight in Asia. We want to keep some of this trade because there's potential for a pretty large down move, but then again we want to limit exposure. And if we see a spike into today's levels, which is actually a bit higher, we had a cap of 105.17 today, so if we see a cap, we will actually look to sell into it. Nothing changing what we expect. So at this point, from Friday's levels, we've seen 44 pips is the best off of the low entry, and then 55 pips is the best, and of course that's the bottom. So you're not, unless you know to take it off the bottom, you're not going to get the best. But so if you're still in the trade, we suggested this morning, I think, at the post, so you're around 104.15. So but that's typically what we look. You should be at break even at a minimum, and we tend to move once we see 20 pips of whatever entry we have. So if we took the 49 entry, we would need to see 29 to move it to break even, unless we just don't like the trade. Or if we took the 59 entry, we're looking for 39 to move it to break even. So if we're swing trading, we just watch the cap if we want to stay with it, and we'll update the cap, and then based on our position, adjust it. Intraday, profit target, we like 40 to 70 pips on an intraday trade. To the next day, if we get in a good move and we keep some on, we're targeting 100 to 150 pips, on a daily move. If we have a good entry and we leave some on, we like to partial profit to take some home, and because if it revisits, we can re-enter. But if we ride at 50 pips and then it goes back and stops us out, what's the point of trading? So 20 pips is usually, and if you want to put it at 20 pips as a profit target, you can do that and you'll make money, because off of the levels, 20 pips is seen a whole lot. I can tell you that because we move to break even a lot on our trades. And that's pretty much an example of how to process day to day what we look for. Like I said, on a cap side, 10 to 12 pips above or below the cap would be a fixed stop if you need to place a fixed stop, if you're not an active trader. The sales, once it touches the first level and comes off 20 pips, we move to break even. If it revisits it and touches the second level, we re-enter the trade and do the same process, 20 pips. if it goes straight through this and we don't see 20 pips, we won't necessarily add here. So if we get in at 49, we're not going to add at 59, but we would add at the cap. And that's us personally, years of experience. And you can begin to do your own strategy, but we tend to trust these levels pretty well. We know where we're getting out, and so we kind of know our risk against what we're looking at. And if we don't like the trade, we'll try to enter close to the cap and just get out of our first entry when it revisits, and we'll take the profit from the cap, or and treat it that way. Okay, guys, it's a quick example. We'll continue to do these and some other pairs, do some walkthroughs, and hopefully this will help give you a kind of a visual map of how to handle it, or how we do it in-house. And so I suggest you guys, use them to complement your trading. It can validate your own systems and your own levels, and maybe get the most out of them. All right, good luck in the markets, and we'll catch you next time.